Good morning. Good morning from Chicago. It is 8:01 a.m. Chicago time on Tuesday, the 5th of April, 2022. This is episode number 2206. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Sound should be just fantastic again this morning. Thanks for checking that for me. This morning, we have a mild risk-off tinge, let's call it. It is not really mild risk-off, but we are starting to, versus yesterday's settlement prices, we are falling off a little bit after what was a very bullish close in the indices yesterday, which, by the way, relatively surprising, the kind of action that we got yesterday into the close. It looked like a legitimate short squeeze in the way that it was drifting and squeezing and drifting and squeezing, basically walking into levels and then pushing through, walking in and pushing through. So, if you didn't have a long position on, this is the kind of environment where you're looking to get short against areas because it's slow enough and it looks like it's struggling to move higher, and then it moves higher, and then you become a buyer to cover, and it just, rinse and repeat. So pretty tough rally, in my opinion. Anyway, mild risk off. The what's on deck in terms of risk today. There are more sanctions against Russia that have been announced. There's a debate within Europe about cutting off oil and gas imports. Germany's, of course, against that because it'll force Germany to convert back to coal, which is also a bad idea. So this is this is a wake-up call to some of these countries, I guess. But as a result, because of this push for sanctions against Russia, there's a bid under crude. Crude has been pushing up and is holding steady. He's flagging above $100 this morning, and you could see that it's actually been up a fair amount. It's been up as far as $105.59 in the May contract. The front contract in crude currently is May, the K contract. And so it's been relatively bullish there. RBA, the Reserve Bank of Australia, came out and removed the word from their statement. I forget which word, but it gave a hawkish view on inflation, which has caused the Australian dollar to pop higher this morning. This is a significant macro event. The RBA is one of the top central banks in the world. In terms of what's on deck, we did get this morning, we got a high tier figure, which is a U.S. balance of trade, came in at $89.2 billion in deficit versus 88.5 consensus and 88 forecast. Those are deficits. $88 billion forecast, 89 came in, so slightly worse. We did get some numbers out of France. There's also some election noise out of France as the right-wing competitor to Macron is gaining a little bit, creating pressure on Europe that one of its biggest countries and economies might be going the way of the kind of an extremist right wing, whatever. And it depends, extremist right wing are very strong words. It depends from which angle you're looking at it. But that's what's coming across. Today, what's left, we've got the global composite, S&P global composite and services PMIs at 9:45, 15 minutes after the open. ISM non-manufacturing is an important one at 10 a.m. today. And then we have the Fed parade starting at 10 with Fed's Kashkari, then Fed's Brainerd. at 10, and then 11:05 we have Brainerd again, and then Williams at 2. API crude oil stock change at 4:30, and then the Caixin Services PMI out of China at 9:45 for those who are trading the Nikkei or Hang Seng and so on. Turning our attention to the S&P. The S&P is showing a balanced profile after popping higher and immediately selling off. The S&P has very, very light volume. I talked about this last week that we are likely to go into a grind this week, and this is likely to continue through. Yes, we do have the Fed minutes tomorrow, the FOMC minutes tomorrow, which may see some movement, but overall, this whole week after unemployment, right before earnings, this whole week is traditionally very, very quiet. And as I talked about yesterday, in adjusting the rotations, which are listed in the gray box in front of you, I noticed that statistically speaking, the rotations are dropping dramatically. The range is dropping off slowly, but the range is based on 252 days of data, which is a year of trading. 252 days is 1 year of trading days, but the rotations are based on 10 sessions, 1 minute bars on the RTH or on the main session. So these adapt very quickly, and they are adapting dramatically to the downside. We've basically lost about 30% of our volatility in the S&P over the last 2.5 weeks. So remember to account for that. So the trade sizes will go up. The trade becomes slower, thicker, range-bound, grindy, and you need to adjust your expectations accordingly, okay? The S&P has traded 24.25 points, pretty much in line. It is definitely inside of what we would call normal, which is up to 40 points. It is higher than the mode, which is the most common. It's not really telling us very much. It is highlighted because it's bigger than 23.75, but 24 points is really coming into line with the historical range, the overnight range, which is down at 14 points, believe it or not. So this is the range is falling overnight. The point of control higher today than yesterday, 45, 67, 75. Okay, looking at what was expected yesterday, and it was really surprising to me that we ended up with scenario 2. It shouldn't be, but there was a lot that was saying that we're very likely to push to 25, potentially 14 yesterday on scenario 1. Scenario 2 had us going to 65, 67, and we have this very important area up here at 45, 77, which is a bunch of highs and a couple of lows recently right here. This area here represents a key support resistance area, but having projected that it would likely push as far as 40 before basing and running, and with the current range projections, I didn't expect it higher than that, but the market had a different idea. For those of you who keep reminding me that I'm wrong about my scenarios, which is interesting because I'm not seeking to be right. I'm seeking to have a plan. And if you don't get that, you don't get that. It's your account. You're trading. It's not my problem. But still, I'm here to help people out and most of all, help you trade professionally by sharing how I'm seeing things and how I've been trading things for a long, long time. But here, what we see yesterday is a drop, and it looked like scenario 1 in play. Remember, scenario 1 was looking for test to 30, which is the prior day's point of control, and get down into 25, potentially 14, and then come back and rest with a lower high, lower low. And what we did is we pushed to 32.75, and then we breached the one-time framing down, which is the prior day's high at 45.45. Once we did that, we seemed to have a very strong short squeeze, and then we went into this incredibly tight. Look at that zipper. It's uncommon to see that after an impulse. So we had a really good impulse of 20.75 points here, a big move. This is pretty significant. And then we consolidated for a long time before coming down, testing the prior high at 45.45. The current mid, this is another mid setup right there. The blue line is right on top of the 45 as well. Hopefully you can see it. Let me know if you don't. And then we had we broke through the RTH VWAP. It's kind of early for the VWAP at this point. And then we had the full session VWAP with the full session mid as backstops in addition to the opening swing. So this area, 45 to 43, very important area. It's set up along, which I narrated in Convergent Trading's Head Trader channel, at 45.25, looking for a push to 52.75, 57.25, and so on and so forth. Unfortunately, because of the way this moved, this was more of a scalp setup than it is a structured setup, because although we had structure to lean against, defining the risk here was a little bit more tricky. So we end up spiking down, spiking right back up, consolidating some more, which is just not a great trade here, even if you held long. It breached the IB high, and then it finally started to wake up and go the direction of testing the IB from above and grinding out. Look at how much grinding there is. Like I've said before, there was more grinding here yesterday than at a high school open crib party. So, so to me, this was a difficult, unless you could really catch that 45 area, which lucky enough was able to get a long on. Unless you could catch that, the areas where we would normally have structure, where we would have an impulse pull back to prior structure, prior zippers, get long, and run higher. Sorry, guys. It's the structure wasn't there because of these overlapping zipper type bars. You know, when you have a structure like this, it is difficult to define risk. You can always say, oh, it's the lowest low, but which lowest low? It looks good. Hindsight, it looks good. But this, what we ended up with yesterday, is a multi-distribution trend-like profile. We rejected the lower prices. We really rejected the lower prices, and we rotated up in an active price discovery mode. And where did we end up? We ended up at the 45.77. So if I turn on the master levels here, you'll see that there's this important support resistance area at 45.75 to 45.77. The settlement is at 45.77.75, and we left the point of control open at 45.80, a naked point of control open. The delta was positive all day, pretty good lifting all day long. There was some selling, there was some attempted selling, some 800 lots sweeps, and there were several areas where it was sweeping down, but it was quickly absorbed and taken up. Here's the thing. This is exactly the kind of situation where if you lean too much on the macro stuff, oh, you know, the Fed is doing this, man, it can't go this high, it can't. This could get you in trouble, and it could even get you in trouble by forcing you to stand aside, which is opportunity cost. So make sure that you're educated about what's going on around the world and you're aware as a trader. It's very important to be aware, but make sure you're trading your plan. Trade price. Price tells all. So despite the surprise that we are pushing higher, we had some pretty important clues in the fact that we ended the one-time framing down by breaking above 45. So longs only, and look for areas to get long, look for areas to get long. period. Despite whatever you thought, you remember scenario one was expected to be pushed down into the closing range and then rally into the closing range, expected it down at 25 and 14. The market's saying no, that's not what's going to happen. That's not what we want. And you're trading what the market wants, not what you're not trading to be right. So the idea of right and wrong, we all have to dispel with that. Get rid of that. It's not about being right or wrong. It is about executing according to your plan and doing so with incredible consistency. Carrying the conversation forward to what's expected for today. Now, this is this chart is a 1 tick by 20 rank PNF chart, and this chart has been quite busy. If you look, you'll see there are a lot of bars here, a lot of bars for the overnight session before the day session kicks in, right? Fewer bars and even fewer bars. And now look at these, there's like 9 bars here. This is symptomatic or an indication to really pull back on aggression. When this is why I like to use PNF, Renko more so than time-based charts, because I get a very quick visual of what the true action is, because I don't get a bar unless the market moves a certain amount or reverses a certain amount. This is why it's important for me to monitor things on that basis versus time. Time-based charts have their place. The composite is a daily chart here. But what we did here yesterday, let's bring that forward. So the magnet's down here at 36, right? What we did here yesterday is we put in a peak. We predicted this lower high. We predicted this drop last week, right? On Thursday. Then Friday put in a lower low, but it put in an excess low on Friday. Put in an excess low on Friday. Very important indication there that we had an excess low. Let me show you what that looks like. So you see that spike low? This excess low right here. This is a market that started, went down to 4,500 and finished almost where it started. This is clear rejection. So what do we look for the next day? We look for an opportunity that we start to fill in this excess, the wick of the candle. If we start to fill in the wick of the candle, we expect it to drop, and that's what I saw in the overnight session and expected for the day session. Yesterday, what it did is it took out the high of that reversal candle and finished at the high, and so we are likely to retest this 4,600. This last high is now in view. So this, we saw a reversal at the top. We saw a pullback to 4,500. You can see there's a lot of volume at the 4,500. We pulled back to the 4,500. We used it as a base. We came back and closed right on top of the MC point of control on Friday, right there at the MC point of control. So it closed right above it. So we tested below the magnet, came back, closed above the magnet, and then yesterday we tested down into that magnet again. We went to 32, and then we started buying. And so what this is doing is it's gone down the hill again, and it's working its way back up. And so we're looking at what it does at on the other side of this, right? So we're looking at 4,600 as the next key area to test, more like 40, I think it's 4590 something. And that's what's setting up here. Anyway, so let's take a look at Edge Pro X here for a second. All right, so here's kind of a cleaner picture of what's going on. Again, the dark blue line is the session mid, full session mid. The cyan line is the full session VWAP, resetting every day. At the beginning of the session, the orange profiles are the overnight session. The blue profiles are the day session. And so what we've done is we've put in higher low, higher low. We took out this prior high. And so we have to keep an eye on this higher low, this low from yesterday at 32. What was the exact number? 32.75. We've got to keep an eye on that. And then essentially what we have here, right there, right in this area here, we have support at the 50, 50, 53 right here. So this morning, the expectation is an open auction that responds. Notice this morning's low. Look at that low. What is that low? What is that low? How does that low look to you? Come on. Crickets. Hearing crickets. Good. It's weak. Weak low here. Double base. Double base on these candles. We are below VWAP. We're below mid. We're at the point of control. Open and chop. Test that low and potentially come down and clean up into the 45.63, by the way, is yesterday's point of control in TPOs. The point of control yesterday in volume is, which I believe is much more accurate, is 45.55.50, and that's where I expect us to go into this 50 area, 55 area, with a backstop at 50.53. I expect the 50.53 to hold, and then I expect us to come right back and tackle, again, the 45.77 from below. This is scenario one. Looking for this thing to pull back and then into the 55 or so, looking for the 50, 53 area to hold that whole section there, expecting that to be pretty solid support. I'd be surprised if it breaks through, but if it breaks through, it gives us a good opportunity for a short side trade into the 32. And so that's the primary scenario. I should have changed colors. Did not. I'll change colors for scenario two. Scenario two, open auction that pushes higher immediately, goes to that 77, tests this mid, and then really squeezes yesterday's high, and gets us into the 90, and then eventually pushes to the 4,600, and that's a continuation of yesterday's auction, which was strong. Yesterday's auction was price discovery that was disrupted by the closure of the market, and it continued, and it managed to continue to 87. So the overnight high at 87 might be the overnight stat for today. So scenario two, look for it to be strong right off the get-go. Maybe it pokes that 63, probably not. And if it pushes through the 77, then I'm looking long into 4,600. Just buy and hold that, looking for a break of this 87 area and continue higher. And then we come back into this balance up here, just above the 4,600. Okay, the next big area above that, 4,620. Those are the two key scenarios for today. Hopefully you gain something and you're picking something up every day. As I told you yesterday, don't forget to watch this video from last Wednesday with Crudelli. If you're struggling with consistency, I go through really some step-by-step bullet points on the things, the work you have to do to become more consistent. I also go over what that mid setup is, which is what that long was yesterday at 45.25 in the morning. That was another mid setup, which is described in this video. You can get it at edgeclear.com/deli. Good luck, and I'll catch you tomorrow. Take care.